XRP is currently on the cusp of a major move, as suggested by technical and fundamental factors. The daily RSI is slightly above the neutral 50 level, and if XRP can break through the $0.399 barrier, it could reach a high of $0.43350. Additionally, a growing number of new XRPL accounts suggest that interest in XRP remains strong. The Ripple lawsuit is projected to be resolved favorably in the first half of 2023. This article provides an in-depth analysis of the current state of XRP, both technically and fundamentally. The technical indicators suggest that XRP is at a crossroads, with a key barrier at $0.399 that must be breached for a significant move. On the fundamental side, the XRP validator website shows that new accounts are being created daily and that the Ripple lawsuit might be resolved favorably in the first half of 2023. Bitcoin's BTC price has been steadily increasing, recently crossing the $27,000 mark. Profit transactions on the BTC network have more than doubled since Wednesday, indicating a bullish momentum. An analysis using the Elliott waves technique suggests BTC has potential to hit a resistance level of $29,200, $32,300. On-chain metrics such as the MVRV ratio and daily active addresses also support this. However, exchange inflow is increasing, indicating more selling pressure and the possibility of halting the bull rally. This article provides an in-depth analysis of Bitcoin's BTC current price performance and its potential to rally further. It was noted that BTC had crossed the $27,000 mark and its MVRV ratio was up, which was a bullish signal. Additionally, BTC's Fear and Greed Index had a score of 64, indicating a bullish momentum for the cryptocurrency. Other metrics such as BTC's daily active addresses and exchange inflow were also discussed. It was concluded that while there is potential for BTC to continue its uptrend, there is also a possibility of a halt due to the increased selling pressure. In the last 2 weeks, the cryptocurrency market has seen a $200 billion boom, leading to a shock Bitcoin price prediction. Ethereum and other top 10 cryptocurrencies have seen price increases. The U.S. Federal Reserve is now under pressure to ease back on its interest rate program in response to the collapse of Silicon Valley Bank. This could potentially lead to further increases in the Bitcoin price and other cryptocurrencies. 186 banks in the U.S. could be vulnerable to similar risks as SVB, and the Fed is expected to cut rates later this year. The Fed's response to the banking crisis could potentially trigger U.S. dollar hyperinflation and the collapse of the entire financial system. This article evaluates the recent surge in the prices of Bitcoin, Ethereum, and other top 10 cryptocurrencies, triggered by the $200 billion boom in the last 2 weeks. It also looks at the potential implications of the collapse of Silicon Valley Bank and other related banks on the Federal Reserve's actions. The article also examines the expectation of traders that the Fed will likely hike interest rates by 1/4 percentage point next week before rapidly cutting rates later this year. Finally, it discusses the potential for the Fed's quantitative easing to trigger U.S. dollar hyperinflation and the collapse of the entire financial system. Bitcoin was approaching a key weekly close on March 19th, with traders concerned about a potential retest of lower levels. After briefly touching $28,000, BTC USD dropped throughout out-of-hours trading. Traders are now weighing the likelihood of Bitcoin returning to test support around $26,100. Analysts highlighted the importance of $26,800 as the key level to hold in order to maintain the trend. Rect Capital noted the significance of the 200-period moving average and weekly timeframes. This article provides an analysis of the current state of Bitcoin and how it has been performing in the week ending on March 19th. It discusses the importance of the 200-period moving average and weekly timeframes, currently sitting at $25,350, and how it could determine whether BTC USD will stay above $26,800. It also mentions how traders are concerned of a potential retest of lower levels and how BTC USD was still in line for an impressive candle close, having last acted around $27,000 in June 2022. The Ethereum network has implemented a base fee mechanism. This has led to a significant reduction in the supply of Ethereum coins, creating deflationary pressure and potential for increased demand and higher prices. The current burn rate of 614,000 ETH per year further highlights the magnitude of the change brought about by EIP 1559. Investors and traders should keep a close eye on the developments in the Ethereum ecosystem. This article provides an insightful look into the impact of the Ethereum Improvement Proposal 1559, which has resulted in an increased burn rate of ETH coins. The growing burn rate is expected to lead to a reduction in the overall supply of the digital asset, which could potentially lead to higher prices due to increased demand. It is important to consider that the burn rate can fluctuate based on various factors, such as the number of transactions on the network and the associated gas fees. As Ethereum moves toward Ethereum 2.0, the network is expected to become more efficient, potentially impacting the burn rate and its influence on the market.